some various ways you can pay less tax in Ireland. Ireland is less than friendly to individual investors. We have capital gains tax, we have disposal tax, we have 41% income tax on higher tax brackets. When compared to other countries, specifically the US, we're penalized quite a lot for trying to invest. With that, like in Ireland, there are actually not many ways we can save on tax, but there are a few that I'm going to discuss in this video, so let's get started. Is start a pension or contribute more to a pension. Ireland is a bit funny in that a lot of companies are actually still providing pensions, although it seems to be slowing down. And a lot of companies will provide a pension to their employees and will match up to a certain amount. So, for example, this amount could be anywhere from 3 to 10%, or in some crazy cases, it's bigger than that. So, basically, all that means is if you contribute 3%, the company will match you. I need to say this, if you're not doing this, if your employer has a match and you're not at least contributing the minimum, you're basically wasting money. Because the money that the employer contributes for you is basically free. It's free money. Let's say, for example, your company contributes up to 3%. You're basically, let's say you contribute the 3%, they contribute another 3%, that's 6%. You're basically doubling your initial investment straight away. The and by the way, this is all tax free. Any pensions contributions are taken out before tax. So you get the maximum benefit for your pension. This is something I wish I learned earlier. I was kind of stubborn about contributing the maximum to my pension. I thought I could do better, but this is just basically free money. So in your example, like you're basically getting 100% return because your 3% pension, your employer returns 3%. You can't get any better than that. It'd be very hard to find that type of return even on the stock market, right? The higher the match, obviously, the more you should contribute to your pension. I want to show you this article, which will be linked below. So, like they give, I will have these are 8 ways you can contribute. You can save tax in Ireland, but here's one of them. Like, so if you save €100 a month into your pension, you won't pay income tax on the 100. And if you're in a higher tax bracket, it will cost you just €60 in net terms, because 40% you'll be putting into your pension would otherwise be taking out of your payslip, which is quite nice. Like it's a real win for paying less tax. The one thing I also want to bring up is this page. So you might say, okay, I have matched my employer contribution. What's next? The next thing I go say is you could look at maxing out your pension. Now, I don't advise this for everybody. I'm currently doing this. I'm currently 29 years old. So I can contribute a max per year up to basically 15% of my income. And that progressively gets bigger as you get older. As you can see in the graph here, tax is taken out of your paycheck before tax. So all of this is tax free. Now there is a max yearly contribution of 115,000 at the time of writing this, which is 2020, and then the tax relief will basically stop. If you go over that, you'll have to pay more tax, but I mean that's quite a high number to be contributing per year to your pension. The other question you might have is like, okay, it's not taxed now, but won't it be taxed later? Well, yes, it will be. But as I will show you in this article, is that the first 200,000 of a pension, especially in a lump sum, is tax free. So that means that basically the first 200,000 you contribute to your pension can be taken out completely tax free. Now, I don't know where you're going to get that sort of non-taxable kind of amount anywhere else, but that's a very, very good reason to contribute to your pension. Now, people have different reasons to not contribute to your pension. Maybe they're saving for a house, an investment property. That's all fair, but I still think you should, if your employer offers a employee match, then I would just say at least to the minimum just to get you started and then build on it as you get older. And then as it says here, like lump sums between like 2,000 and 500,000 are taxed at 20%, with any balance over that basically taxed at the marginal tax rate. If I haven't convinced you at this time to open a pension or at least contribute more to your pension, I implore you to look into the numbers and see how how advantageous it is, especially for people in Ireland. I don't know about other European countries, but I'm sure they have something similar. All Europeans seem to have something similar. I am currently maxing out my pension, as I said, and I wish it's something I'd done earlier. I was quite arrogant, to be perfectly honest with you, and I thought I could do better than this, but this is all tax free. You might as well do it. Method of basically saving on some tax is if you have a spare room in your house, you can actually rent out that room and you will qualify for the rent a room scheme. And this is obviously if you're lucky enough to own your own home. And if you do, there's quite a few tax advantages you get to this. Under the rent a room scheme, you're allowed to earn up to €14,000 a year, entirely tax free by just renting out a spare room in your home. Now, be very careful. This does not apply to Airbnb, for example, or any other like systems that basically, like, let's say holiday homes, where it doesn't work that way. This person needs to be actively living here for a certain period of time, and it does not apply to Airbnb. Airbnb is actually taxed at like this whatever tax bracket you're in, and anything over 25,000 a year in that, you're taxed at 40% of that, which can be quite a lot. So if you're lucky enough to have a spare room in your house and you do own the house, I would advise having a look at renting out a room. I do have a spare room in my house. I don't actually do this because for me, I I live with a significant other, so I would rather have our privacy than rent out another room. But it's an option if you're there. I will leave the links specifically to this Punkers article. They list in like 10 ways to say to pay less tax. Now some of these are a bit, honestly, are not great. Like they say keep your receipts, claim like your health expenses. Like these are very common things you should do anyway, and I think everybody kind of knows about. The other one, the most advantageous one, is definitely your pension. If you're looking to own your own home and maybe you live on your own, have a look at renting out a room. I will also add the links for the max contribution you can add for each bracket, and I will also add the link for the tax lump sum. I hope you enjoyed the video. If you have any questions, stick them in the comments below, and I'll try to get to them. Until next time.